Hello, good morning. This is Shark for LankaEquityForum.com. Today, I'm looking at Commercial Bank. You see the 10-year history. This is the chart on daily closing balance. Of course, we can go to the weekly as well and monthly. So this is where you change your settings. And I'm using candlestick. Well, I'm having MACD. I'm using this particularly today for a specific purpose, just to indicate or to detect divergences. So there are two types of divergences. One is the positive divergence and the other one is a negative divergence. As you know, this is a very important tool, especially using the MACD to identify the potential reversals. Okay, so it's very, very important. Now, if you look at this 10-year history, you will find many divergences. Okay, let's see what is the divergence here. Now, can you see here? Okay, let me see here the price. Oops, wait a minute. Let me try to. Oh, sorry. I think I should be taking this one. I took the wrong one here. Let me delete. Okay. Have a look at this divergence here. There is a low point here. This is the lowest low. Okay. That's like, look at the divergence, which is very clear from here to here. Okay, see the MACD, which was from a very low point and was making a higher low, while here it's the opposite. So these are divergences. Okay, now this is called a positive divergence, as you all know by now. Now look at this is the other divergence. Okay, if you want to see clearly here. Okay, it's a higher high, okay, to a higher low, and here from a lower high to a higher high. So this is called a negative divergence. Now, this is the 10-year history. If you look at, let's see the weekly, it will be much clearer for you. So we are basically here. Okay, so here you see the divergence. Okay, here you see the divergence, but we are looking from a 2010 to 2014 or 2015. So the duration is somewhat of a crucial factor here. But just to explain to you where do we stand with regard to divergences. So just for educational purposes that I wanted to indicate this. Now, keeping aside the divergence factor, okay, if you're looking, there is a divergence slide here, okay, and you will see here, and then the price started moving up, okay, from a consolidation phase, okay, towards where it stands now. Now you see here, since 2010 lately, okay, we saw a correction taking place after the initial run since 2009. Okay, the price from a 42 level went to around 140, and then we saw extensive correction taking place almost closer to the extreme correction level. So the correction completed around 78.6. Okay, now this is why it's very important. assume that you were here, okay, you would have expected for a correction. If you had expected for a correction of about 38.2, you would have entered here thinking it was lucky, and then what happened was the price started breaking the 38.2 towards, with a huge red candle here, towards the 61.8. So this position would have been able, for some people, if you were following Fibonacci tool, you could have maybe entered here as well for averaging purposes. And my next level would have been somewhere here, though it did not come, it was around here. So gradually you would have seen your holding making capital gains, and as a target, if you see here this cup formation, it took longer period for this consolidation, or for this ranging somewhere here, and in this consolidation period, which I would like to call it, before its next phase of a bull run. Okay, so have a look at it. The target was almost like 150, okay, and here was started with 100, so we're talking about a 50 rupee target. So that should end up around 200. So we have few more rupees, or 193. So 200, we should see some kind of a resistance point in this run up. Okay, now we are seeing on this weekly candle a huge gain, okay, from 175 towards 190. So for me, the market is somewhat overheated for commercial bank. So we should see some resistance taking place in the vicinity of 200. Okay, so we should be very careful on that. So it's better not to enter right now for commercial bank. If you're on a technical side trader, you should wait for some healthy correction, not a mere correction, a correction towards 61.8, and start accumulating if you have missed this run. So a 61.8 may not come, but if you are to be very cautious about this particular trade, the idea is that you should not get caught at a higher or at peak, because the recovery period would be very long. If you're on a credit, then it becomes a double whammy. So it's best that you try to invest with cash, not with your margin. So if you are to invest, to be very careful to wait for a proper correction, a significant correction, before entering a commercial bank. That's about on this episode for commercial bank. Until I see you on another video, this is Shark signing off.